Hey, Joe, we're back, baby.
We are back.
Back again. Another exciting week.
It was.
Another exciting week in quarantine.
I know. At least market, because the thing is, like, obviously quarantine is so boring for so many people, including us. But at least like markets have been interesting and like choppy and all that kind of stuff. So it's kept us busy, which is good.
I know. Obviously, you know, in a way, we have been blessed because there's plenty to talk about. There's plenty going on in the markets right now. It's just constant new themes. You know, we're getting themes. You know, theme after theme, which is great. You know, it's every trader's dream if you're obviously staying on the right side of it, keeping in tune with these fundamentals, baby.
Exactly.
So, I mean, look, where do you reckon we should start? There's plenty to talk about. Go on, you pick the starting point.
I don't know, really. I mean, go on. Let's start with some of the moves we've seen. We could talk about dollar first of all, which has been slammed this week. Absolutely
hammered, you know, and that, if you look at it, I guess that really come in because I'd noted it to the Freak Network guys, because initially we'd started the week, you know, generally flat, if not too sort of positive, if you look at the Dixie. And then Monday night, I started seeing some signs. I saw this like evening star formation on the daily. I was like, guys, keep an eye on this. If this closes, you know, as an evening star, what's the selling pressure that comes? And so have we seen it since Monday night. And I think there's a particular reason for that initially in terms of the risk appetite. And go on, you can sort of share the info on that.
Yeah, I mean, there's a couple of things going on that have been hitting the dollar this week. Like you're saying, one of them is risk appetite. So I think we've got one of those Instagram posts going out soon which describes this. But equities, particularly in the US, have had their best week since, I think, 1974.
Wow.
So,
that's crazy. Considering we've been in the bear market, that's mad.
I know. Well, the thing is, we're actually in a bull market again already, because we must be about 30% up from those coronavirus lows that we saw. And that was only about 3 weeks ago. So, it's amazing stuff. But anyway.
Yeah, like the thing is, the interesting thing I must sort of spin on that is, okay, it's great that the stock markets are back in a bull market, but then at the same time, millions and millions and millions of US people are losing their jobs every week, but then stocks are rallying.
Exactly.
You know,
loads of people I've seen saying the same thing, agreeing with that. It's almost like stocks are out of touch with the economic reality that we're actually seeing.
Exactly. The reality. Exactly. That's exactly it. I think obviously that at the end of the day, stocks right now are probably really loving as well. You know, all this action from the FOMC, which we'll get onto shortly, but a lot of diluting of, a lot of pumping of stimulus into the markets from the FOMC. I think one thing as well, just quickly before we go into FOMC, that I was, you know, in terms of risk appetite, if you remember at the start of the week, markets were seeing light at the end of the tunnel because there was some stats that were showing perhaps there's a slowdown of the rate of which cases are rising of COVID-19 in the hotspots in Europe. Remember, you picked that up, didn't you?
Yeah. So I think, like you rightly said, the Fed, I think, is the main reason for this stock rally. But also this week, like you were just saying, another thing which has been supportive of risk appetite has been the fact that, some of the hotspots, so Spain, Italy, the US, particularly New York, and even other parts of Europe as well, like even in the UK, all these places have been seeing a slowing rate of the spread of coronavirus and a slowdown in how quickly the number of deaths are increasing. Obviously, still really high. It's really sad, but the rate at which deaths are going up is a lot slower now than it was, you know, like a week ago or 2 weeks ago.
That's reassuring.
Which, that was definitely taken as a good sign.
Massively.
By the market.
Yeah, as I say, a bit of light at the end of the tunnel, you know, in all of this madness, right? Hopefully that is the a strong sign that we are going to start slowing down now. Fingers crossed. Look, let's go on to the FOMC, dude. Man, when I said this the other week, how does the FOMC get even more dovish, dude? How?
I don't know. Yeah.
Man, it's literally unlimited.
It's amazing, isn't it? Like, what can they do next?
Man, when I saw you post that in the Telegram group, I was like, what? What's going on here? And it's right in the middle of all that data coming down as well, man. You handled that so well for the members. It was incredible. What happened? Yeah. What are they doing? What more are they doing?
Yeah, so basically, to be fair to them, this program that they announced, it's been in the works for a couple of weeks, and they did tell us it was in the works. It's just when they announced it, they didn't give us a time when they were going to announce it. So it was like, oh my God, they've just announced it. And it was a lot bigger than we expected. So basically, on Thursday, so that's yesterday for us recording right now, they announced this 2.3 trillion loan package, and they're going to lend that money directly, because usually when they operate through banks, like, you know, all the normal banks, but they're going to be offering this money directly to the US economy, directly to businesses, directly to state and local governments. 2.3 trillion. So
that is
huge,
absolutely
man. Loved that.
Yeah, and as a consequence, obviously, dollar being hit, more pumping of dollars into the economy, diluting. So, yeah, like, as I say, it's funny because if not last podcast, the podcast before that, do you remember, I think the title, I said, dollar is doomed, something along those lines, or, you know, death be upon the dollar, or something. I can't remember what the headline was, but it's something like that. And, you know, it's very much been the case, apart from that other week where we had a brief bit of consolidation. It's been slammed. It's the safe haven is deteriorating for the time being, which is good. It's good. So yeah, what else we got? Bank of England. That was an interesting one. Supportive for the pound.
That was really interesting, and I think. Well, but I'll describe what it was first. So basically, the UK government has effectively an overdraft with the Bank of England. Just like most of us have an overdraft with our bank, they have an overdraft with the Bank of England. And what they announced yesterday morning, in the early hours of yesterday morning, well, that's Thursday morning, guys, was that they were massively going to be expanding that overdraft. And they didn't give us a limit either on how big this overdraft could be. So basically, when you look at it that way, it's almost as if the Bank of England is ready to literally just print money and give it to the UK government to fund their spending. So, yeah, a lot of people have been saying it's monetary financing of the government.
Indeed.
Which is just as dovish as you can get, really.
Indeed.
It literally is the pinnacle of dovishness.
Agreed. And the thing is, I think if we just quickly relate this to the markets for the guys, I think from an FX perspective, it was positive for the pound because at the end of the day, obviously, then the government are taking its money from the Bank of England, and then it's going to be very supportive, right, of the economy, of continuing to support those programs for the businesses, for consumers. So at the end of the day, we're less likely to falter or take more potentially of a blow from this COVID-19. So it's a positive for GBP, right?
Yeah, agreed. Because sometimes in these weird times of crisis, classic FX fundamentals don't really work. Like dovish doesn't necessarily mean weaker for a currency, because sometimes, like you were just saying, that dovish move can actually be seen as a really good thing for the UK economy in the long run. So that should be supportive for the pound.
Indeed.
Definitely.
Exactly. Now, another thing, remember, because I remember specifically, I was sitting in bed on Sunday night and just checking my phone, because I had some positions over the weekend, and then, you know, I saw like GBP gapped massively to the downside. I was scrambling, like, what's going on here? And obviously, poor Boris Johnson was taken into intensive care, wasn't he? Because of the virus, you know. And that was quite worrying. So obviously, GBP gapped lower. Then he was obviously that carried through that volatility because he was kept in overnight for a couple of nights. But now, good news is he's on the mend. He's on the mend and he's out of intensive care.
Yeah, good news. And that actually was another thing that was a bit supportive for the pound this week as well, because, you know, we were rallying yesterday and on Wednesday. Yeah, definitely that. Bank of England. It's definitely been some pound positive things in the last couple of days.
Yeah, and to be honest, I'm still running some longs on GU, and I think there's a lot of upside to potentially come. There's a lot of ground to recover here because, you know, from like March, let me just get it up here. It was earlier in March. Let's have a look on the daily. Yeah, so at the 10th of March, we were trading above that psychological 130, and then obviously the dollar bulls really picked up some pace, and, you know, we plummeted, remember, down to those lows at sort of mid 114 region. It was crazy. Yeah, so like it's got every room now to recover after that, like a big correction. It's been supported by the fundamentals there. So yeah, I believe it will come back up to those pre-bear market levels above 130. There's some room there.
Agreed. Yeah. I think the only thing that might, well, I mean, I don't know if this is going to happen. Like we say, none of us have a crystal ball. But there's always that risk that the market suddenly scrambles for dollars again. Like, do you remember we saw that in March and everybody was selling everything for dollars, and then there was a shortage of dollar liquidity, and that's why we saw those crazy dollar strength moves. I think there's always a risk that can happen again because we're not out of the woods with this crisis yet.
No.
But yeah, I like GBP as well at the moment, definitely.
And then, yeah, lastly, OPEC. I mean, it seems hopeless, these guys. Seems absolutely hopeless, man. Like, you know, I said to you yesterday, obviously before you were signing off, I was like, Joe, when do you think we'll get an update? And you're just like, maybe in a few hours or so. Man, this was running all the way through till this morning, as in Friday morning. And they still, nothing's still definitive. It's hopeless, dude. You know?
Yeah, they didn't get a deal. I mean, they mostly got a deal, but now it's Mexico, isn't it? Mexico aren't playing ball.
Yeah.
So the deal is conditional on Mexico agreeing to it, which means they don't really have a deal. Yeah.
No, not really. Not by any means. So
I know. Yeah.
I think oil today is closed for trading because of the Easter period. So you know, next week when we resume trading, I wouldn't. If this just remains like as it is at the moment, then oil price is going to get slammed again. Bear in mind, it's funny. We were because I was writing a blog on this. On Thursday, we were up on optimism in positive territory, and then they closed. We were down like over 11% for WTI.
I know.
Beating.
I know.
Understandably, though, right?
Yeah, it's crazy. And I mean, that's probably partly because there were... Do you remember on Thursday, we were actually up about 11% at one point. And that was on those reports that OPEC were going to go 20... They were going to do a 20 million barrels per day cut, which turned out to be just complete rubbish.
Manipulative sources. Yeah, so anyway, that's that, dude. But, all right, look, let's just quickly round it up. What are we looking out for next week? Any sort of key data points we should be aware of?
There's a couple of things that might be interesting on the data front. So US retail sales might be interesting. Aussie jobs data might be interesting. BOC as well. That's on Wednesday, I believe.
Yeah.
Yeah, but I mean, like we said, kind of with the RBA this week, they've already done all that they're going to do. So it'll probably be a bit boring. Other than that, it's just watching these themes that we've been talking about.
Big.
OPEC, coronavirus, Fed, and like you never know when these central banks might come out and do something nowadays. So you always have to be alert.
So true. All over it.
And also, last thing, this will probably will know by Monday about this, but Eurogroup finance ministers as well.
Yes. That was a Euro positive as well, just to round off as well. Right? They've agreed. Have they agreed in principle? Is it just...
They've agreed on everything apart from Corona bonds.
Okay, right. So, but still.
Yeah, so it's good. Basically, they've agreed on like this rescue bailout fund for the EU. If these countries need it, they can borrow cheap money now. And there's not really too many conditions attached to that, which is good. So that's made like Italy happy and stuff like that. But these Corona bonds, joint EU debt, that decision is being left to the individual leaders who will basically decide over the weekend. So we're going to know by Monday, probably.
That'd be interesting. Okay. Well, man, that was another blinder of a week. And to be honest, I'm sure it'll be the same next week.
Oh, mate, same.
These are exciting times, dude. But yeah, that's it from us. Another good one, Joel. Speak to you in a bit.
Yeah, you too. Speak in a bit. Bye.